Good afternoon, everyone. Thank you so much for joining. My name is Marcos, as usual, the portfolio manager here at Stock Specialist. And I've been told by my IT team that we've had quite a large number of attendees. So thank you, everyone, for taking the time out to enjoy our webinar. Today, we'll be focusing primarily, particularly with the rise of interest rates and where we're actually going to be focusing and rebalancing our portfolios in the coming months, which is quite important. A lot of active investors have failed in that previously, but here's how we're going to look at what we can do to succeed. So just as a quick disclaimer, of course, as usual, all content within this webinar is just general advice only. If you do require any personal financial advice, please seek your personal broker or financial planner. Okay, so just on the agenda for today, we're taking a look at a couple of market movers, particularly market movers, what's been going on with the RBA, what's been happening this week, where's the market heading, a lot of questions coming up about that, and of course, our three top stocks that we've been rebalancing into as well. And a little bit of a assessment on our own portfolios as well. Okay, so just to start off, the big news of the week was coming out of the Reserve Bank, which was anticipated by ourselves, which is what we essentially disseminated to our members, that we expected a steady pace at 3.6%. They decided to pause essentially any more rate hikes. However, we are still expecting, at least for the remainder of the year, we are still expecting at least probably one or two more rate hikes. So the terminal rate that we're currently expecting on the futures market is sitting at about 3.85%. Okay, so that's expecting another increase in May, which is the next meeting that they're actually going to have. And I think this statement from Governor Phillip, Dr. Phillip, explains it all. So he stated, to hold the interest rate steady provides the board with more time to evaluate the economy, which we'll expect to grow below trend in the next few years. And when it says below trend, meaning that the overall GDP and the overall economy is actually slowing. Okay. However, they're looking at this from a monetary policy perspective, and for all those without an economics degree, that's okay. That's what I'm here for. Essentially, a monetary policy does incur a bit of a lag effect when it comes to increasing interest rates and how that actually impacts the economy on the demand side. So there essentially is about a 3 to 6 month delay when increasing the interest rates actually has on the economy. And it's not necessarily just because of mortgage rates or the vast majority of what the media is stating. It actually has a wide variety of increases. Of course, it increases your savings account, for example. It also increases the cost of goods and the cost of consumer staples as well, and it increases a lot of wholesale increases between the interbank rates. So it's a completely different estimate to what the actual media is portraying at the current moment. So, and that next part of the statement, and the committee will closely monitor both local and overseas economic data before the next meeting. All right, of course they will. That's their job. All right, so but we'll take a look at how the market has actually taken a look and how the market has actually expected. Yep, there we go. So which stocks will actually get this post-bank crisis? Right, we're really sitting at a little bit of a pivotal point, particularly within the ASX 200. So the ASX 200 is currently sitting about that 7,200 point mark, which is quite high, right? Almost at the all-time high of about 7,600. However, is it sustainable? That's the question. So we're quietly looking, in terms of not particularly what the sector is going to do, not particularly what the index is going to do, but how the index is going to perform comparatively to other indexes, such as the NASDAQ, of course, the NYSE, and of course, international markets overseas, particularly Europe and Asia. So we'll pop over to this next slide. All right. So the RBA expected to pause in the near term, all right, which is what I mentioned, but inflation is still particularly in the spotlight. Okay. The financial sector, we've had a lot of members querying about what's going to be happening within the financial sector, particularly if you're a holder of the big four banks, CBA, NAB, ANZ, Westpac. However, that's not the despite the Australian financial market being quite saturated, the big four are not all the the be all and end all of financial investing. They're all quite a lot of other stocks that we have been recommending to investors. For example, as a quick little tidbit for our webinar viewers, would be Macquarie Group, for example. Macquarie Group has performed extraordinarily well. It's currently sitting about $175 a share, which seems a little bit, exorbitant. However, they are currently sitting about fifth in terms of the financial sector, I believe, at about 150 billion, market capitalization, and those continual earnings that they've been able to achieve are not necessarily within the financial sector as a whole. They also have quite a lot of, actually 75% of their revenue is actually generated internationally. So a lot of those domestic headwinds that we've been seeing in the big four are actually not subject to a bunch of other companies, and Macquarie Group would be one of those in particular. But as I've pointed out here in dot point 3, the market is closely monitoring, of course, the monetary policy decisions and economic data, yada, yada. That's what they always say, of course. But how's it actually impacting the market? So all the how can I say, the less loved sectors, the less loved sectors such as IT, information technology, the telco stocks, utilities, and staples have all outperformed compared to the blue chip stocks, right? So the information technology sectors are still not necessarily where we want them to be in terms of investing. However, we're looking at what we're actually going to invest in within the next couple of months, particularly taking into account these monetary policy decisions. So one of those sectors would be lithium. All right, and this is one of the vast predominantly questions that I've received from the vast majority of my clients. The Australian lithium sector, all right, is essentially matched to the importance of thermal coal within 5 years. All right, so if you've watched a couple of my webinars previously, we know that a couple of our recommendations have been looking essentially what's been the sector to actually take a look at, and one of those, of course, was thermal coal, and we recommended a stock. Gosh, how long ago was it, IT team? It's probably about 4 months ago. Yep, it's probably about 4 months ago. We recommended a stock called Yancoal, YAL, which has a quite strong predominance on thermal coal. And despite all this, despite all the rhetoric that has been coming out of that, those stocks have performed quite well. It's actually one of our best performers. So on top of that, exports of lithium are looking to reach about 19 billion, all right, to the year June 2028. However, the Australia is currently the biggest shipper of lithium, all right, and the second biggest provider of thermal coal. Okay, so only a couple of years ago, those identities were actually switched. Usually, we actually were the biggest exporter of thermal coal. However, Australia is currently now the biggest exporter of lithium, and those are primarily exported by a couple of stocks that I will be discussing later on. So we'll take a quick look at this chart, right? Looks a bit of a shocker, right? The lithium carbonate price. Everyone's been going on about this. So it currently, at about November last year, November 2022, the lithium carbonate price was sitting about 600,000 Chinese yuan per ton. All right. Now it's currently sitting about 230,000, which sounds pretty terrible. However, well, we're just going to have to talk about the stocks, right? Because a lot of contributing factors have contributed to this, particularly Chinese Lunar New Year, as well as the fact that lithium is not necessarily priced as other commodities are priced. Okay, lithium is priced based on whatever the domestic market is actually pricing it at, and China, as being the biggest demand coming out internationally, they essentially have that market share on demanding what price they require. Okay, so you will actually see, if you take a look a little bit more fervently, you will see that, for example, Japan actually has a higher price for lithium hydroxide, right, which is essentially a derivation of lithium carbonate. It's just derived differently, which is actually quite higher than what China is actually presenting. So is it the time to sell? Is it the time to buy? Well, according to my slide and according to me, it's definitely undervalued at current prices. But however, what lithium stocks do you invest in? And that's primarily the most important thing. Okay, everyone can recommend you a lithium stock. There are about 150 stocks just on the ASX that propose that they have lithium, they have gold, they have silver, they have everything. But everyone wants to get on the lithium train. So if we'll take a quick look here. So where to invest? All right. First one. Again, this is this is not one that I would recommend to be buying right now. However, this is a perfect recommendation and a perfect example of what I've been speaking about in terms of the demand and the awareness of what's been going on within the lithium sector. That's called Liontown Resources. Okay, Liontown Resources received a $5.5 billion takeover offer from a company called Albemarle. The ticker code there is ALB. They're listed on the New York Stock Exchange. Okay, and the reason for that, all right, the reason for that is Albemarle is actually the biggest lithium producer in the world. All right, not a lot of investors actually know that. They actually own a mine there in South America, a brine deposit, with a company called SQM. I'm not going to pronounce the name. It's a Sociedad Quinta Minerales. Really bad, but of course it's in Spanish. SQM. All right. So Albemarle and SQM essentially own the largest lithium deposit, brine deposit in South America, in Chile. Okay. However, they've been making quite a large amount of profit. All right, and they have offered Liontown Resources, which is currently due between about Q2 2024 to actually produce high quality spodumene to their offtake partners, and they offered a price of about $2.50. And as you can see on the chart, well, Liontown's actually pretty above that, because the board has unanimously rejected that offer, because they have a long-term perspective of what is actually going on within the lithium market. And that's really good in terms of how the actual lithium prices have actually been turned. And you'll notice during that day as well, Core Lithium as well went up about 15%. Pilbara Minerals as well went up. Pretty much any lithium stock that you've probably got in your head also had quite a good day on terms of that announcement. So we'll just take a look a little bit about Liontown. All right, beautiful. So they've got their primary deposit there is in the pretty north of the Kalgoorlie region. And it's called Kathleen Valley. 156 million tons at about 1.4% grade lithium ion. All right, and also 130 parts per million of tantalum as well, which is pretty neat. So for all you geologists out there, that's actually quite a similar deposit to what the Pilbara region is, because for all those long-term holders of Pilbara Minerals, Pilbara was actually a tantalum deposit at the start. All right, so pretty cool. But as you can see there, just a couple of stats. Lots of buys, but those are a little bit outdated. All right, but this essentially is a sentiment of how we're looking at the lithium market as a whole. All right, so track record, they've done pretty well. They achieved, I'm going to skip a couple ahead. So we're looking at Q2 2022. You can see that they achieved a $300 million debt facility and a financial investment decision, FID. All right, and constructions have been already commenced, and by Q4 2022, we're looking to get that first priority to actual production. So all those Liontown holders out there, we're looking at Q2 2024 for first spodumene production, which is pretty cool. All right, which as I've mentioned before, it's actually quite simple. And we're looking at Liontown to actually generate a little bit of revenue initially before we're looking at a bit of M&A, discoveries. All right, cool. Yeah. Oh, and this is a great one. Okay, so we're looking at this consensus shifting. All right, I don't want to touch on this too much, but the forecast for lithium market deficit is still not changed. This has been verified by CoreLogic, all the major battery metal exchanges in the world globally. And it's expected to grow out to 2040, I should say. And EV penetration, in terms of the EV penetration to the market, electric vehicle penetration to the market, is expected to reach about 50% by 2030. All right, that's huge. 2030 is only 7 years away. All right, so this is what we're looking at, going from a significant shortage of high quality, high grade lithium. All right, and as I've mentioned previously in previous webinars as well, the technical aspect of actually developing a lithium mine is actually far more technical than, say, developing a iron ore mine, or an iron ore mine, or a gold mine, for example. Even if you find a sizable deposit with relatively good grade, there is at least a 5 to 6 year timeline between actually getting that development into the ground and actually producing an asset. okay, at least. All right, but we'll get to that later. So, so Liontown obviously is up about 110% year to date. Obviously, the most of that was due to the Albemarle takeover offer, but you can see they're pretty good, right? And we've been looking at this thematic quite consistently overall. But we're going to talk about another one that we've been recommending to our members for quite a long time, and that's of course Pilbara Minerals. Pilbara Minerals, PLS, the original OG Australian lithium and tantalite mining company. They're currently sitting about that $3.60, $3.70 mark, right? Which is completely ridiculous, in my opinion. So this production capacity, what they're looking at, they've actually received, sorry, they haven't actually received. Actually, we'll skip to the next slide. Yeah, perfect. So I've mentioned this a couple of times before, but you can see here on the chart, the P1000 project. Essentially, the P1000 project is relevant to Pilbara Minerals generating 1 million tons per annum of spodumene concentrate. Okay, they're currently producing about 650, 640, which is quite reasonable, and it's still one of the highest grade and one of the largest producers of hard rock spodumene within the world. Okay, that FID decision was made only a couple of weeks ago, and that final investment decision will only cost, I believe, do not quote me on this, a bit of a disclaimer, I believe it was about 540 million AUD, which will be funded with the cash on hand that Pilbara already has. So Pilbara is already, based on the recent announcements, already has about $2.5 billion cash on hand. So that's not really a concern. So by half year this year, they'll have probably about 3 to 4 billion, which we'll see within the coming weeks. So that P1000, that 1 million tons per annum, all right, just to give you a little bit of perspective, the contracts that Pilbara Minerals currently has, despite the lithium price, the lithium carbonate price decreasing, the actual spodumene contracts that they have are currently sitting about $6,000 US per ton. Okay, 3 years ago, they couldn't barely sell anything for about 400 US per ton. All right, so they're looking at about a 90% margin for quite a significant period of time, and this is the purpose of actually taking a look at actually producing assets, companies that are looking at a forward perspective. And as well, of course, Pilbara had also declared their first inaugural dividend as well of 11 cents, which is pretty great, right? A lot of long-term holders have been looking forward to that for quite some time, and we are expecting, based on our analyst forecasts, we are expecting that to actually increase in the September period as well. So looking about a 6.5–7% yield for that one as well. All right. So yeah, I mentioned this a couple of times as well. As I mentioned, yeah, the inaugural dividend we applied. So that inaugural dividend as well will also be applied to the September payment date, which will essentially be the final dividend payment, essentially meaning that financial year 23 financial results. Okay. So the P1000 expansion project, and they've also, of course, outside of digging the stuff out of the ground and shipping it off to all their contractors, we're actually looking at downstream and midstream projects as well. But if you want to take a look at that a bit further, we can of course help you out with that as well. But this is a little chart that I wanted to mention as well. So everyone's been saying, oh gosh, lithium demand, EV electric vehicle demand has dropped off. Oh gosh, it's so horrible. Yeah, it hasn't been great. It hasn't been great, but it hasn't been great for the last couple of months, right? And this is exactly what I mentioned at the beginning of the webinar there. When you take a look at the year-on-year percentage change, okay, if you take a look at the 2023, that big yellow chart there for Tesla quarterly deliveries, I'm using this as an example. You can also look at you know, the big electric vehicle manufacturers in China, such as BYD. They've also seen a similar uptick in this 2023 period. And you can take a look at, but this Tesla chart actually really helps. And you can see that despite a little bit of a slowdown, a little bit in Q1, now we're starting to look at a big uptick, particularly in electric vehicle manufacturing index, and it's done quite well. So I can't complain about that. But of course, if you've got any questions, you can always let us know in the comment section. And you can take a look at admin@stockspecialist.com.au, or you can give us a call as well. So you can see there over the past 5 years, I don't think that's a really representative percentage of Pilbara's price action. Of course, they've had a little bit of a downside over the last couple of months. However, taking into account the price action over the last 5 years, fantastic. So, however, I'm going to switch the bit for a little bit. So, we'll take a look at uranium. All right. So, of course, we're focusing primarily on commodity sectors that are looking to achieve outperformance within the sector. Yeah. So, Paladin Energy, right? These are the first large-scale uranium production capacity, right? Essentially, they are focused on commercial production in Q2 2024, which is pretty soon. Okay. You say, oh, Marcos, that's quite too long. No, that's not correct, because Paladin Energy is one of the only Australian-based, Australian-owned, I should say, but it is based in Namibia, all right, and is closest to production compared to any other uranium stock on the ASX. The only stock on the ASX that actually has uranium exposure is BHP. Okay, so if you own BHP, you're exposed to uranium. Okay, fantastic. And that's out of the Olympic Dam. Okay, but that's primarily a copper deposit, and they get a little bit of uranium out of that as well. All right, so I'll explain that a little bit further. As I said, Paladin's well established in Namibia. Okay, you can see there the Langer Heinrich mine there in Namibia. And it's so close to the coast. It's fantastic. So they're very close, excellent local infrastructure, right? And they're essentially a significant uranium deposit, not just within the continent, within the world. Okay, so, and you can see here, I really like this point, which unfortunately it's not bolded, but I really want to point it out, is that mining contributed about 10% to Namibia's GDP in 2021. All right, that's significant. That's quite significant. All right, so a lot of these tier 1 jurisdictions, despite them being in Africa, they are a fantastic resource and fantastic support from government as well. All right, so they've got that there within the uranium industry. So, and also on top of that, the Langer Heinrich mine has actually been producing before. So it's not like it's an exploratory company or anything like that. They've actually been producing about 5-10 years ago. So, yep, and so you can hear there, low risk restart. I don't know why it should say low risk. It's essentially no risk. They essentially mid last year, they have Paladin Energy have done a capital raising for about 110 million US, which was oversubscribed. So they're essentially fully funded until the restart of the mine, which is really great. Okay, nice. So a couple of points, as I mentioned, just here a little bit of a summary. All right, so the Langer Heinrich mine, first production targeted for Q1 calendar year 2024. All right, so that's about 9 months, 12 months from now. Offtakes, which is really, really good. So 50% of the current production metrics have already been off-taken by a North American energy company. All right, and when I say North American, I mean the US. I can't remember the name right now, but 50% of offtakes has already been secured. They currently have about 163 million in net cash, no debt, which is fantastic, particularly when you're in a rising interest rate environment. Fantastic. And of course, the sustainable future, right? The sustainable future, it seems like a bit of a pedantic thing to say. However, when you take a look for the likes of Asia and you take a look at the likes of Eastern and Western Europe, taking a look at the energy crisis that is currently going on, the sustainable future is something that is actually really, really important. Okay, so as an example, you know, China really recognizes this as an example. They currently have about 55 nuclear plants currently in the domestic vicinity, and within the next decade, they are looking to produce and develop another 150 nuclear plants as well. So of course we've seen the likes of Fukushima and all those sorts of things that of course generated a bit of dissidence towards the uranium market. However, the uranium sector as a whole, the uranium price as well, has remained very strong. That's something that I've been talking to my clients about quite a bit, but they're focusing quite clearly on generating that carbon-free future, which I think is something that's quite important for the vast majority of viewers, and of course, the vast majority of investors, which is pretty cool. So if you take a look at the next slide, that's exactly what I want to take a look at. So PDN, right? You notice that appreciated its value since 2020, about a 15x. Not a bad buy. I can't really exemplify this enough. This is not a made-up graph. It's right there in front of you. And of course, as I mentioned before on the previous slide, this is particularly as a sort of crux of the Fukushima incident. The Paladin used to be trading about $8 to $10 per share prior to that incident, and of course the political jurisdictions and all those sorts of things. But now, of course, as you can see, the uranium sector has become something that we're taking quite a an actual serious look at. So you can see there since 2022 15x. So that's not pretty bad as well. All right, so we're going to talk about our portfolios a little bit. All right, so how have our portfolios been doing? Well, our income portfolio has done pretty well. Keep in mind, these are only these are not taking into account dividend yields. These are only capital growth. Okay, so in terms of capital growth, our income portfolio has done about 22% year to date for our members. All right, and our growth portfolio had pretty good results. Right, they've picked quite a few undervalued stocks there that have performed quite well. Our top one did about 38% in 4 months. That was a fantastic one. I can't tell you it, but of course, it was pretty good. And the next one, our mining portfolio has done quite well, and we've been speaking to our members, particularly on this, about the resurgence of the energy sector as well. The oil price, the Brent crude price, was sitting around sub $70, $70 US a barrel, and that's exactly when we started to recommend stocks within the energy sector. Particularly one of those would be, for example, Woodside Energy. We recommended Woodside at about $19 per share. For all those Woodside Energy shareholders, we know it's currently trading about 35, right? Not bad. It's about a 90% increase. So plus dividends as well. So we're pretty happy with our mining portfolio. That's actually our standout portfolio. And these are the kind of recommendations that we've been performing to our members, right? So the next, yeah, I don't want to talk about this too much, but pretty much exactly what I've been talking about. We provide the in-depth analysis, okay? So you're able to read the reports, take a look, understand your own analysis. If you have any questions, of course, you can always give us a call, but we identify early as opposed to post what's happened. We're not a news article. We're not AFR. We're not anything like that. We're a research house. This is exactly what we do in terms of actually providing in-depth analysis and research, how to identify where the undervalued opportunities are. Okay. And look, these next couple of slides are a little bit, yeah, a little bit embarrassing, but we'll see. You know, you can see a couple of our reviews. You know, we've got quite a few reviews on Product Review. You can see that we've been, you know, quite happy. You can see on the next one as well. I think I actually get a mention here in this one. Do I? Yeah, there you go. Yeah, I do. Ah, that's excellent. So, you know, a lot of our clients are obviously quite happy with the results that we've achieved, and the service as well that they've been provided. So to top it all off, guys, once again, thank you so much for joining in. And just to finalize here, you know, as a webinar viewer, just for exclusive offer, as a bit of an Easter break, where we're going to be finishing up a little bit early this afternoon, but hopefully we're going to have a little bit of a restful break. I don't really remember the last time I had a bit of a day off, but I hope everyone has a fantastic Easter break. But for just our webinar viewers, we can take a look at these exclusive offers that we've got for you. So you've got the gold offer. There's currently retails about $1,500 per annum. All right, we've got it about 25% off at $997 per annum, which gives you access to the daily income report that is received prior to market open every day. All right, gives you a general recommendations, how the stock specialists recommendations have been going, how the markets have been operating, international portfolio recommendations, etc. as well. Income growth, ETF, and of course your account manager as well. But the primary value where a lot of our clients have, you know, generated the most amount of value is that 3-year diamond membership. So typically the diamond membership retails for about $3,000 per year. Okay, but we've got 3-year diamond, which usually retails 3 times 3, 9,000 per year. We've got about 4,000, 3,997 total for a 3-year membership. As I mentioned, we've got the daily financial report. We've got the income report, growth, mining, ETF. Mining, as I mentioned before, is our best performer at the moment, and the ETF portfolio for a little bit more of our defensive clients out there. Defensive bear portfolio, we've got technical analysis software tools. Okay, sounds a little bit fancy. It's really not. It's a very simple software tool that we've developed, that we've provided to our members, and we're allowed, our members can utilize that to essentially find different stocks within the market that suit their trading criteria, which is quite cool. Plus you get, of course, dedicated account manager, and of course the main thing, you're able to, of course, have portfolio reviews with either myself and of course any of my analyst colleagues as well, where we dissect your portfolio. You can send us a list of your ticket codes and we can dissect your portfolio in the sense of your rebalancing, if you require any rebalancing, anything like that. But all those sorts of things, as you've seen in the previous correspondence, a lot of our clients are quite happy with the portfolio reviews. That's where they generate the most value. So if any of our webinar viewers do require me personally, feel free to give me a call. My personal number, I'm just going to put this just out for you. My personal number is just 0459 934 889. All right, my name is Marcos, the portfolio manager here. And if you have any questions about any of our services or anything that I can help you out with, please don't hesitate to ask. Okay, so thank you again, all of you, for joining our webinar. Thank you for so much for taking your time, and hopefully we'll speak to you soon. Enjoy the rest of your day and enjoy your Easter break. Thank you.